All right. Now let us go into the risk and control. Right. This is the bit where um, even you have a good flow, it is important. But if you don't have good risk and control on your process, then it it will all turn out to be nothing. Right. It will turn out to be in a bad sign. So let me just go through with you. What are the potential risks? All right, when we talk about purchase acquisition, over here we can think about is unauthorized. All right, it goes back to number one, unauthorized, and number two, which is unnecessary. Request. This is the potential risk. All right, have a have this flow. All right, you have all this flow nicely done. All right, everything is good. They are important, of course, but what is the first potential risk over here is that it is unauthorized and it is unnecessary. And if you have a purchase requisition which is unnecessary, you will be, what is the impact of having unnecessary requests? You will basically, the money will just go away, right? It will fly off. And if it's unnecessary, means it will be a loss. You will create loss. Why you will create loss? Basically expenses, right? It's like expenses, right? And expenses, if increase, it will, and if expenses increase, you will have your loss. All right, it's something like that, right? So how are you going to control this? How to control this? Approval. All right, you will have the system. You have maybe over here approval stage. That's why it is purchase requisition and approval. Then go down to the purchase order. In this stage, if you only look at the purchase order, this one, we don't do this, the possibility of it goes wrong is you got incorrect supplier or terms. All right, purchase order during this stage go to the wrong supplier slash terms. All right, to solve this, very simple, you create a list of supplier. But the thing is paradox, right? Once you have a list of supplier and you get familiarized with the supplier, then supplier will adjust. You know, like in reality, it's like that sort of things happening over here, but it's a paradox of relationship. You know, when you deal with the supplier, But anyway, you will have to get the list check up, and then you will have to, in a deeper in a bigger company, you will have to have this approval over here. You need to propose the supplier with the, they call this the price, all right. What they call this, price bidding, all right. There will be a price bidding, and then there will be like a propose, then approval. This only happen if a big slash significant amount. Good receive. Over here, simply, if you receive the wrong, the potential risk, alright, the potential risk doing the good. Receipt is wrong quantity. Wrong quantity, or I would say missing, right? Missing. So what you can do over here is, of course, inspection before you receive. At the same time, you want to do a matching over here to the purchase order. All right, match this to the purchase order over here. And when we come to this one, all right, invoicing, you don't invoicing, but just put prior invoice. Over here, it goes back to this one, this thing. You want to make sure that there's no duplicate. Or fake invoice. So how you do it? This part and this part is pretty much interconnected, right? When you receive the invoice, means you want to pay, and if you receive fake invoice or duplicate invoice, you will end up paying them, and you will end up losing losing the cash, right? And in a way, how do we solve this issue? In the business world, we have the best, this is like the most mostly used term, which is what we call three-way matching. Okay, the three-way matching over here is regarding how we're going to match the purchase order plus GRN and then plus the invoice. This will ensure that the invoice is not fake or duplicated, and with that, we can ensure that the payment over here, the payment is valid. All right, the payment is paid to the valid invoice. Then only over here, what things goes wrong, we scared of paying wrong amount or wrong supplier. Basically, cash going out to the wrong people. All right, put that people. Again, over here is SOD, segregation of duty. If you remember, over here as well, anything that is related to cash, we want to segregate the them accordingly. All right. Okay, the process over here is the same as well. When we look back into these stages, over here last time only the posting or the financial statement database will came in over here. What is this again? Before this step to here, you know what happened in the system, right? This is what I'm talking about, is the system. If you remember, the information system, they record the transactions. What they do, they record, they store the transactions, they record, process and store the transactions, right? And in the system, we know that there is the concept of database, right? Database is the place where all the data is being stored in a particularly arranged manner, and the database might have multiple tables, right? And what I want to highlight over here, what is it, this financial statement database and what is not. Basically over here is when it hits the invoice, then all the transactions or all the informations that would be entered into the database will create the debit and the credit entry. All right, it will create either one entry. All right, it will create the debit and credit entry that would be related to the table. All right, over here. Whereas over here, the table that is being stored in the system doesn't actually affect this part over here. And why is it I'm highlighting this one to you? You might be looking at in the system later on when we try out the system next week, is in the process before the invoice, you might not see the accounts code, but you might also see the accounts code, right? Depends on the system process. Usually the process before this, you might not see the account code, but over here you might see the account code. But in a sense that transactions usually being recognized as a purchase in your financial statement only happen when the invoice is being received, all right? Unless there's the law or regulation where it goes back to the standards, all right, for you to recognize, all right, when there's a different standard requires to recognize. And yeah, pretty much that's it. All right, that's it about today's lecture. All right, it's very short. It's a very short lecture that is on these two things. All right, and the code. All right, I want to continue the code, which is U R